I want to bring in our first trust advisor, their chief economist, Brian Wesbury. Brian, just your initial thoughts on how this is playing out in real time.
Yeah, Charles, your history is great. This is not the first time the White House has gone after a Fed governor, and for whatever reason. And all I would say about this is if she's guilty of falsifying mortgage documents, she needs to go. And it seems to me that it's a pretty easy thing to disprove. I mean, she's got to have the file somewhere. Show us the place where she checked the box or she didn't check the box. And if she can't show it, then it's time for her to go. And then all I would say is this has nothing to do with Fed independence. And if the Fed wants to scream about independence, they have to go back to 2008. Actually, we could go back before that, but especially 2008. That's when the Federal Reserve, with quantitative easing, decided to finance government spending. They did it again, even in a bigger way, during COVID. So I think it's the Fed that has become more politically involved, not the president, who has become less a fan of Fed independence. The Fed has itself to blame for this.
Yeah, and you know what? And then the idea, to be honest with you, about independence from ideology. We see where ideology rules, and at some point, you know, if Harris won, we would have seen political interference and the lack of political ideological independence, without a doubt. Let me go back to the last week, Powell. In that Jackson Hole speech, which I think will be examined for many years to come. I guess officially ditching 2% inflation as a target. As a target, they'll settle for hopefully that it works out. Let me get your thoughts on that.
Yeah, you know what really happened last week is 5 years ago in 2020, the Federal Reserve decided that because inflation was only 1.5% per year in the previous 10 years, that they should try to make inflation average 2% over time. And so actually nobody knew what that meant.
Right.
Does that mean we're going to have 2.5% inflation for 10 years? Or 3.5% for 5 years, or 5% for 3 years. So I see. My belief is that the inflation target for the Fed should be 0. We should have no inflation, a stable currency. And so if I was the head of the Fed and we had 1.5% inflation, I would say, hey, we did a better job than the 2%. We need to get it down to 0. Instead, Powell said we got to take it higher.
Right.
And we ended up with 9% inflation. It was a complete and utter failure. So for him to kind of admit this, sort of, without saying it was a failure, he always blames inflation on something else other than himself. but for him to give this up, I thought that was a pretty good thing. And so at least we're back to 2% now, and not above 2%, which is what they were accepting back 5 years ago.
I got 30 seconds, Brian. But I have to ask, right, the Federal Reserve paid out $186 billion last year to banks, essentially not to make loans to Main Street. We're talking over 10 years, $1 trillion. This is crazy. I mean, is it time to close this window?
Yep. Oh, Charles, we made the biggest change in monetary policy in U.S. history back in 2008, and no one talks about it. No one asked Powell about it at these meetings. He didn't speak about it in Jackson Hole, and what we're ended up doing is paying banks almost $200 billion a year. The Fed is losing $100 billion a year right now. We have more losses on bank books today and the Fed books than we did in 2008 with the subprime loan crisis. So what they've done, they did all of this to fix the subprime loans, and they ended up creating more losses today. They have created a less safe financial world today than we had back in 2008. It's classic government. Whenever they try to fix something, they actually make it worse.
Yeah. Man, I wish we had more time. Brian, we got to bring you back real soon, my friend. Thank you very much.